When Bitcoin dumps, well, Ethereum, it really dumps, feels the pain even more. When Bitcoin makes gains, Ethereum still just feels pain. Nothing really happens. It's been a wild roller coaster ride for Ethereum holders this cycle without any compelling use cases or great new narratives to really get behind that are sticky. ETH has suffered. Now, if you can imagine a roller coaster ride that mainly goes down, that's kind of what Ethereum's been like. But could this all be about to change thanks to a huge new proposal from the chain man himself, Vitalik Big Dick Buterin? Well, maybe. Or could the writing finally be on the wall for ETH, with competitors like Solana, Sui, Aptos making big gains, primed potentially for Solana to overtake it? Well, today we'll try to figure all this out, starting from the big idea from Vitalik himself, which is a proposal to swap out the Ethereum virtual machine. Now, the details are very super nerdy and technical. Get your nerd glasses out. We're going to break it down very easy, though. Here's the basics of it. EVM means Ethereum Virtual Machine, which is the computation engine for executing smart contracts on the Ethereum network, working kind of like a decentralized operating system. And on a forum called Ethereum Magicians, they should just rename it to Ethereum Ivory Tower Developers. Anyway, Vitalik posted an idea to replace this with the alternative architecture called RSIC V, which would essentially enable a new way of executing smart contracts. Key points here are that old EVM contracts would still work. The two types would essentially become interoperable. Code could be written in Rust as well as Solidity. Rust would be a big advantage considering how much more popular it is with developers. The whole purpose here, according to the post, is to greatly improve the efficiency of the Ethereum execution layer, resolving one of the primary scaling bottlenecks. Vitalik also added that when it comes to improving simplicity on the execution layer, this change is perhaps the only way. Remember, they threw out the sharding idea. We were going to have sharding, should have happened by now. Ethereum should be 64x more scalable and cost a fraction of a penny to use, but they didn't do that. They pursued another method, layer 2s. So this radical proposal here would fundamentally alter how Ethereum works. But looking around at how crypto is developing, the problem is it feels like this could be a little bit too late, to be honest. But before we dive into that, a big thanks to Crypto.com for sponsoring this video. So if you're looking for a trusted platform to trade crypto, yeah, probably. Well, Crypto.com Exchange is the most licensed exchange in the market, serving 140 million different users across 90 different countries. Whether you're into spot trading or using advanced bots like DCA or grid bots or TWAP bots, it has everything you need to trade efficiently. With robust API connectivity and a VIP program that is offering lower fees, it is built for serious traders. So don't miss out. Sign up today. Link down below in the description. You can take your trading to the next level with Crypto.com. Now back to the Ethereum conversation. Look, Ethereum has been in a constant state of evolution ever since it first launched. Big shifts so far being the transition from proof of work to proof of stake, the emergence of a sprawling, wild network of layer 2s around the main chain. But ETH now is actually trading at around the same price it was back in September 2022 when the switch from proof of stake happened, or to proof of stake happened. Well, layer 1 competitors, well, they didn't really require additional layer 2s like Solana, Sui. They just work better at the main chain without all the fragmentation and liquidity and bridging all that bullshit. Now, this is partly because they have much less friction for users. That's why they're being more successful. Those proposed changes we just talked about, well, the problem is that all sounds great, but that should be being implemented now, not years from now, because when's all this actually going to happen? These are long-term ideas that will take a lot of time to execute, months to debate in the ivory tower, years to implement. Many huge institutional tailwinds are forming up for crypto right now. We have a new pro-crypto SEC chair, Paul Atkins. He's taking over the SEC this week. And let's just look at the price action again, because it's starting to look like, compared to BTC, ETH might be having a bit of a problem. Long, drawn-out death spiral. It's the Nokia of crypto. Every time Bitcoin reclaims its old all-time highs, you take a look over at ETH, and instead of following Bitcoin higher, it feels like it's just been continually trading lower and lower than it was before. It has lost the zeitgeist this cycle. Or look at comparable prices across 2 dates, and it's the same story. Bitcoin, for example, went from $66,000 to $90,000 from April 2024 to April 2025. Ethereum went literally in the opposite direction, from 3.2K down to 1.6K, a 50% drop in the same time that Bitcoin went up by almost 50%. The ETH-BTC ratio is basically at an all-time low, which if you're a contrarian, say, well, that's a perfect spot to buy. But I've been hearing that for 6 months, man. Then you've got the ETH ETFs, which have been continually losing asset under management this year, starting at almost $9 billion when they launched last August, peaking at $12.3 billion last December, but bleeding continually, basically. This week's a great example. We had $2 billion in the first 3 days of trading this week into Bitcoin ETF products and $10 million of outflows from Ethereum. Wall Street just ain't buying. Another negative signal can be found if you check ETH dominance, which this week hit an all-time low as it dropped towards 7%, which again, okay, contrarian. Look, see, it's just been kicked in the balls so much. Surely we've got to buy this. Look how contrarian it is. It's dropped to, very, very low dominance, usually around 20%, by the way. It's like 66% under its sort of normal levels. So with all this going on, does it really make sense for Ethereum to suddenly talk about making major structural changes to the chain's mechanics so we can finally get some increased throughput? And although development should never stop, shouldn't fundamentals be to some extent locked in by now? It still feels like a work in progress. They threw out the idea of scaling, which we were supposed to have sharding probably this year, and now we're not going to have this RSI-CV thing for probably 2 or 3 years. Too little, too late. Also, as mentioned, there are all those Ethereum competitors. This cycle has seen the landscape shifting dramatically. And what I'm talking about here, of course, is Solana. And yeah, we've got Avalanche and Sui and others that are doing very well too by comparison. But Solana has been outperforming Ethereum, well, for the last 3 years, basically. 2024, though, was all about meme coins. Solana had demand because it had a compelling use case this cycle, like Ethereum did in 2021 with NFTs or in 2017 with ICOs. This was Solana's cycle. It was the meme coin king. Meme coins were all about Solana because guess what? You could actually do it over there for a fraction of a penny. You could buy $10 of a meme coin without having to spend $50 in gas fees. So if you were trading memes or AI tokens, AI agents, and all that stuff later on, guess what? You needed Solana to pay for gas fees, and in many cases, people were just using their Solana to buy those coins, going straight into them, creating demand that pushed Solana up to a new all-time high. Something ETH, by stark contrast, did not manage to do because there's no compelling use cases. Nothing good has been launched on Ethereum in the last year. Eigenlayer, nerds, get out of here. The focus on Solana here, okay? So if you look at the on-chain data, you can find some pretty significant bridged flows moving across to Solana from other chains, totaling almost $1.7 billion over the last few months, with around $1.1 billion of that money coming over from Ethereum. Now, Ethereum's still got a lot of old whale money on it who are just too lazy to move because why would they? They're just sitting there making passive income. They can't be bothered going over to Solana and playing with me. They just don't care. They have $100 million in ETH. Why are they going to move? Solana has clearly surpassed Ethereum when it comes to transactions over the past 3 months as well, at around 4.9 billion transactions compared to 1.1 billion. Okay, you expand it out to the layer 2s and it's going to look better, but still, Solana, a single chain, winning even most times when you combine the layer 2s in with that. Then there's Solana's weekly network revenue, which recently went above $21 billion, beating all other layer 1s and layer 2s combined. Kind of a big deal, taking a 47.6% share of the market. While weekly DEX volumes by chain also have Solana out on top with 27% of the total, ahead of literally everybody. Although, that being said, Ethereum does still dominate when it comes to TVL. Again, those old whales are just kind of hanging out over there, doing whatever old whales do. We have almost $50 billion of TVL over on ETH right now, compared to Solana's $7.7 billion. And despite a few metrics like TVL, the overall outperformance by Solana isn't something that investors really should ignore. We saw another big story this week as well. It was that Galaxy Digital decided that Solana is now the fastest horse and is accordingly repositioning themselves. They, at least that's the conclusions being drawn from what we've seen on chain over the last few weeks. Galaxy Digital transferred 65,600 Ethereum to Binance and withdrew 752,240 Solana, indicating likely that they're swapping at least a big portion of their Ethereum over to Solana, around $100 million worth. This comes not long after a Standard Chartered report claiming Ethereum is in structural decline. Just keep kicking the balls here, man. Stop, he's already dead. Then that's the kind of negative sentiment that sometimes does mark a bottom. Another comment from that report states that Ethereum is at a crossroads, which is probably a more accurate assumption to make here, to be honest. It's far from doomed, but the competition's hungry and Ethereum hasn't been reacting quickly enough. It's still the number 2 crypto for now, but it seems ultimately undecided about what the future holds, where it's heading, how long it's going to take to get there. When will these upgrades come? RSI CV, great, exciting. Not exciting in 2030, right? Imagine how much farther ahead Solana is going to be by then, or Sui's going to be then, or Aptos, or Avalanche, or these other chains. Ethereum needs to be bolder, have bolder, more fast-moving, excited, locked-in leadership. Right now, we're struggling with that. Thanks for watching.